with Greece's cash for reforms negotiations. To help us break it down, we're joined by Vidak Radonjic, founder and CEO of the Beryl Consulting Group. Vidak, always a pleasure. Thanks for joining us again.
Good evening, Michelle.
So Vidak, the ECB extending the third loan in a week to Greece. Markets rallying, Athens stock market up 9%, US markets rallying, European markets rallying. This game of pretend and extend continues, kicking the can down the road, but the road just seems to be getting a little shorter each time. Do you agree?
Yeah, well, the deadlines are they like to do things very close to deadlines, which is very interesting. I'm not surprised that they are basically saying that they're very close to the deal. I think they will actually have a deal, perhaps this week. I think the market has already priced that in. It's interesting also that in order to get new loans, new money, they're going to basically paying with the same money they're getting. They're going to be paying the old loans.
So let's talk a little bit about this new deal. There has been a very positive reaction to it. Dijsselbloem, who chairs the group of 19 Eurozone countries, is saying that the Greek plan was, quote, a basis to really restart the talks again and get a real result. What is so new and different? These wranglings have been going on for 5 months. What does this proposal bring to the table that the others haven't? Sure.
Well, just the fact that he kind of agrees that this is a good foundation to actually start negotiation, so to speak, it's something that is new. Because he's been really kind of adamant about anything that comes from the Greek side. So what's new about this deal is actually Greece made a breakthrough in terms of balancing the books. So they are increasing the VAT. They are going to extend the retirement age. So they have done something they should have done it 3 months ago. So the question is, why didn't do this 3 months ago?
Well, they were holding out a lot on VAT, value-added tax, particularly in the area of energy and electricity, refusing to raise the rate on that, refusing to raise the rate on medicines, and refusing to take away from pension funds, as in line with the austerity measures that they opposed and that the Syriza party got elected on. But one thing that they seem to be okay with is that the proposal includes new taxes on the wealthy and on businesses. Now, is this a good idea with an economy that's struggling as much as Greece's economy is?
Well, any economist would say it's not a good idea, but they have to do something. So that's what they're proposing, and they're going to basically agree. Both parties will agree on this.
But we're already seeing people and private companies pull out money out of Greek banks at an alarming rate. You're telling the wealthy you're going to increase taxes on them, and private companies as well. We're going to see an even bigger run on Greek banks, wouldn't you say?
It's called solidarity tax. I mean, if the other scenario is even worse for wealthy people in Greece, because if Greece pulls out of the EU, the wealthiest people will lose the most because they have the most. So it's something that it's very logical that people at the top will have to contribute more, and poor people, they're already enough. So there's nothing really to take away from them, from pensioners as well as from unions.
Well, Greece is required to pay the IMF 1.6 billion euros by the end of the month. And as you mentioned earlier, this is the ridiculous part. So Greece is borrowing money from the people it owes money in order to pay interest on the money that it owes those people, the IMF and the ECB, and quite frankly, money that Greece will probably never pay the full principal on.
If it's a corporation, this would be a classic Ponzi scheme. But this Greece is a country, so a lot of politics, political influence.
Why not just let Greece default? I mean, the people that it's borrowing money from are the people it owes the money to. So why don't they just say, you know what, this is ridiculous. Like you say, it's a Ponzi scheme. Let's just write this whole thing off.
As I said, it's a country, and this country is located close to Russia. We have issues today. Actually, there was EU has extended sanctions on Russia for another 6 months. So I think geopolitics is more important to EU and United States as well than finance and economics.
Well, the Russian point is interesting. As we know, Tsipras went to St. Petersburg last week. Greek Prime Minister met with the Russian President Vladimir Putin. Those two have been cozying up to each other. There's speculation that Russia may offer some financial aid to Greece. How likely is that?
Well, I don't think it's likely because I think EU will do something. I mean, the economy of Greece is so small, and they will just have to swallow their pride and let the Greece stay in the EU.
So does this Russian card give Greece the upper hand now?
Well, it's all negotiations, so they have some kind of backing behind. So I would say it's pretty much like classical negotiation. Nothing new with that.
Because before Russia came into the picture, we were in the same situation with Greece and the EU. Does it feel like the European Union finance ministers have relaxed their position a little bit on their demands? Is that why we're making a deal? Maybe because the Greek government is giving a little, but that the EU is giving a lot more?
I think both are kind of trying to come to the central point. I think there is negotiations are there for the reason to kind of reach the point where everybody will kind of agree. But in long run, in long run, this is not going to solve anything because Greece will never be able to pay the debts. We all know that unless there is a 50% haircut.
And extend.
Absolutely.
Until when, Vidak? Until when are we playing this game?
Until the politicians are sitting where they are now, and maybe new politicians will come later on.
So why do the markets rally on this when we all know that this is what's happening? We're just kicking the can down the road and pretending that this will just be
Well, I think it's mostly
resolved.
short covering. I don't think there's new money coming into the market. People just covering their shorts, and that's why the market has
Well,
gone
does
up.
a default anyway actually mean that Greece will exit? Because there's nothing from a legal, technical point of view in the EU Charter that says that if you default, you have to leave the Eurozone, that you can no longer be a member of the single currency unit. There's no mechanism from a technical point of view in place for an exit of any member.
It's very interesting, of course. I mean, for example, there are many members like Croatia. They're not member of, they don't have EU, euro currency. So, but obviously this is a specific situation, and if a founding partner of EU is withdrawing, then what about Greece? What about Italy? What about Portugal? So there are lots of issues of contagion.
Vidak, very quickly, how do you see this playing out by the end of the week?
I think they will reach some kind of agreement, and then, as you said, Michelle, at the beginning, this is going to be extend and pretend game for another 6 months. So we might have the same situation.
So we'll have the same conversation again very soon.
Yes.
All right, thank you so much.
Thank you,
Vidak Radonjic, founder and CEO of the Beryl Consulting Group.